This is James Hierchik with this week's Autochartist weekly Forex futures and equity market recap for the week ending June 22nd, 2012. With the emphasis on the Greek elections last weekend, Autochartist identified one scenario that could have taken place if the Greeks had voted to exit the euro. This is why the DJ Euro Stoxx 50 index was the stock index to watch on Monday, June 18th. If this vote had turned out bearish, probably would have seen a collapse in the equity markets, and this could have dropped this contract down to 2028. Now the sideways action here still indicates that point C is still intact, and that's slightly above the 2284 area. As long as this remains resistance, we still could see downside movement into 2028. Now on Tuesday, after turning its main trend up on the 1440 minute chart, the New Zealand dollar US dollar symbol NZD USD surged to the upside, setting up a possible move into the Autochartist key levels at 83.42. Now this approaching pattern made the New Zealand dollar US dollar the Forex market to watch on Tuesday, June 19th. So we still have a chance to work higher. The market is running into resistance about 50% of this high to this low. So this is a normal reaction to this point. We now could be looking at a 50% retracement of this bottom down here near 74.50 up to 80. So we could be looking at around 77.50 to 77 as the next potential support area. We also looked at crude oil last week, and we had an up and down market. First we had an upside move that failed, but then finally on Thursday, based on Wednesday's worse than expected supply and demand report, crude oil collapsed to the downside, and it took out a bottom near 81.12, setting up a move into the 70s. This is why this was the market to watch on Wednesday, June 20th and Thursday, June 21st. And the breakdown to the downside made the chart pattern attractive to bearish traders. Now, another market we are looking at was the Japanese yen US dollar futures contract. After a sharp sell-off in the global equity market sent investors flocking to the safety of the US dollar, we saw liquidation in the Japanese yen as traders flocked to the safety of the dollar and out of higher risk assets. This speculation led to selling pressure on the Japanese yen, making it the currency market to watch late last week. You can see based on the size of these candlesticks that there was conviction behind the trade, and now we're looking for a possible move to the 124.72 area, this level here. Now, if stocks begin to rally, then this market may not reach this target, and we could see it stabilize. If stocks begin to break again and traders shed risky assets, then look for further downside pressure in the Japanese yen futures contract. This has been James Hierchik with this week's Autochartist weekly market analysis for Forex futures and equity trades for the week ending June 22nd, 2012.